Good morning, traders. Good morning, traders. Today we want to discuss Indices Trader explains two Dow Jones money key levels. Indices Trader explains two Dow Jones money key levels. All right, so if you are day trading or swing trading the Dow Jones, the first thing that you want to understand is that you are competing with the Wall Street professional traders. And those professional traders only trade around key levels. So they are looking for trading setup, they are looking for value in a zone of specific key levels. And you also want to know those key levels. Today we want to talk about two specifics Dow Jones money key levels. Why money? The reason is that a big financial institution will buy around the money key levels. What I'm calling here money key level, it is about the long-term equilibrium price level. Somewhere around February 2016, I have given traders the first long-term equilibrium price level for the Dow Jones. Now, you have to understand that I usually give to traders, I do not give a exact key level. I give to traders key level around the exact key level. So probably the key level that I gave you before should be in the zone. So I always speak about in the zone. All right. So the first long-term equilibrium price level is in the zone of 16679. 16679. All right. And this is a money key level. All right. Because the smart money will try to buy at a money key levels. All right. If they are trading in the financial market. If you look carefully here, around which day exactly, hold on please, exactly on the 10th of March 2016, they bought Dow Jones right here. Right here it is. This is where the money came into the market to buy the Dow Jones index, right there. Near the zone of 16679. All right. You see now, it's a money key level. There is another key level. So in 1 year, usually we have at least two long key levels or long-term equilibrium price level. Okay, so in 1 year, so 2016, we can have at least two, money key levels, what I like to call two long-term equilibrium price level for the Dow Jones. All right. So here again, if you look carefully on my chart, here it is, here it is, here it is, my friend, here it is. Which day exactly? At the end of the trading section on the 27th of June 2016, the smart money bought the Dow Jones again at the second long-term equilibrium price level. So the second long-term equilibrium price level, which I'm giving to traders today for free, is at a 17077. So if you are day trading, swing trading, position trading, especially if you are an investor or position trader, you want to know the long-term equilibrium price level of the financial instrument that you are trading. Now, let me say this again. If you are an investor in the financial market, if you are a position trader, you are a medium-term market participant in the financial market, you must know the long-term equilibrium price level of the financial instrument that you are trading. So traders that are new to us or investors that are new to us, the long-term equilibrium price level for any financial instrument is the long-term technical fair value for that financial instrument. We have the fundamental fair value and we have also the technical fair value. So you may say to me, George, I'm a fundamental trader and I do not want to know anything about the technical analysis or technical fair value. But here it is. The smart money bought the Dow Jones right here, all right, on the 10th of March 2016, right there, all right, around the first long-term equilibrium price level in the zone of 16679. Here we are again in June 2016, exactly on the end of the trading session on the 27th of June 2016. So recently, they bought it at the second long-term equilibrium price level for the Dow Jones 17077. So talking about indices trader, explain two Dow Jones key levels. The first, the first money key level is at 16679, and the second money key level for the Dow Jones is at 17077. Now, I need to remind the traders or investors that are new to us that I am the only one that know exactly how to calculate, the long-term equilibrium price level for any financial instrument. All right, and I'm very proud of it. So, all right, very proud of it. So, because it took me some time to get to that point, and well, now I get it right. Okay. So here it is. You can see here they bought it here. Boom, price going up. Okay. So you may say to me, John, what can I do with this? It's okay, that's a very good question. All right, talking about money key level, or long-term equilibrium price level, or long-term technical fair value of a financial instrument. In this case, we are talking about the Dow Jones Industrial Average. Here you can see that, in fact, the smart money, those who were smart, bought it below here as the price formed a double bottom chart pattern in the vicinity of the first long-term equilibrium price level. So for us, as I told traders 100 times, if we see a double bottom pattern, the double bottom chart pattern will become truly bullish if the price finds support above the neckline. Here it is, the neckline. I'm going to color it now into green. So that's what we say to traders. So the smartest investors bought it here after the double bottom here, common central line kaput, first bullish candle. They bought it somewhere in the zone of 16014. All right. But then the conservative, smart money bought it right here as the price breaks above, the neckline, and retest it here, change direction. They will buy it, so breakable, retest. You see they doing this bullish candlestick bar here. They bought it in a zone of 16679. This is the first money, key level for the Dow Jones Index. Other traders that were more patient bought it again. It breaks above the money key level. So once we know the key level, we know the reaction of the price action around key level. It may break above it and retest it. Here it is. So you know it. All right. The smart money, what I told say to stock traders also, that the smart money will usually come into the stock market and buy and hold around mid-February. Did you know that? Around mid-February. So here it is, you see the 16th of February. It is 2016. It's February 16. That's where we have this double bottom, not far away from the zone of 16679. So remember that you are trading a stock, you are in the financial market. Know that, big sum of money will enter the stock market around mid-February. So why? That's a very good question. So why usually take place? Because a trader who understand Elliott wave, you understand, all right? So they are waiting first for the first wave, the first reaction, yes or no, all right? And then they wait for what? They pull back, which is the second wave. And those smart Elliott wave traders want to catch the big portion of the trend. They are most of them are interested in catching the third Elliott wave. But the third Elliott wave will take place after the first and the second wave, are completed. Yes or no? The same thing is happening in the financial market. So a new year is starting. All right. A lot of traders will rush into the market in January. So look carefully, my friend. So this is January 2016. All right. So if I put a vertical line here, January 2016, all right? Look what the price did. The price went down fast. In January, the market was going down. So a lot of people think that, the market is going to go down again this year. No. If the market is going to go down, it must go up first. So now you have to understand how the professional are trading. If they want to sell, they want the price to go up first. So you'll see sometime when the forex market is open, that's why we say to TST traders to wait until London is open and wait the first 30 minutes candlestick bar to close. So market is open, they want to sell. 70% of the time, not always, all right, not always, the price will go up to a resistance level. They want to sell very high. So price must go up first. They want to buy 70% of the time, the price must go down first. That's why we say to traders, the price must go up first. Don't buy when it's going up. You want to buy when it pulls back to a support level and change direction. But generally, a lot of traders are buying as the price is running away. They say, George, I can't catch it. It's running away from me. Just be patient. Just be patient. If it stops pulling back, wait another day. Another day, wait another day, all right? Wait another day. Sometimes you may miss some opportunity, but it's not going to be the end of the world. So let it go out and then pull back. So January, here it is. Financial market goes down. Why? Smart money want to buy low, all right? The price form a bullish chart pattern. After going down, it form a bullish chart pattern. Now they start buying. So in January, sometime you will see January goes down and the year will be bullish. Or January is bullish and then the year is bearish. Is it always like this? No. But is it something we can work with? Yes. Why? Because you want to buy high, you want to buy low. Correction, you want to buy low and you want to sell high. Okay, you are buying cheap, very low price, and you want to sell it at a high price. Okay? All right? You want to sell high and buy low. Okay, that's why the smart money is doing all the time. Very simple. So at the beginning of the year, we are watching January to close first, and then you see in February the reason why the smart money prefer to enter the market around mid-February is like the January is kind of a fast move. From the beginning of February up to the mid-February is a kind of a second wave pull back. All right. And then around that time, they usually buy. Is it always like this? No. Is the smart money trying to hide their footprint in the financial market? Yes. Why? Because if you want to, okay, it's nothing illegal about it. If you want to put a lot of money in the financial market, all right, do you go on Twitter and say, oh, I just bought Microsoft stock and I bought 5 million shares and I want the whole world to know that I will keep buying, or blah, blah, blah. You may hear sometime on television people talking about that sometime, but usually they will talk about it when they have already made a lot of profit out of it. But it's not on the day when they are putting the money on their table and say, oh, when New York is open today, this is a Goldman spokesman, and when New York is open today, we will be busy selling Dow Jones. No, it doesn't work like that, all right? So the first month, January, second month, we are watching. I need to stress on this because a lot of new traders or beginners, all right, sometimes we record videos like this that are very exciting. And then people think that it's always like this, and they go around and do something that is not true. At the end of the day, we have a trading drill that we follow all the time, all right? We are looking for a high probability trading setup, and then we validate that trading setup, and then we implement a top-down trading method without ignoring the trading triangle. That's the drill all the time, consistently, all right? So you want to work on that first before you start rushing around. So talking about indices trader, explain two Dow Jones money key levels. We can see that the first money key level for the Dow Jones 16679, the second key level, money key level that I'm revealing to you today is at 17077. As you can see here, what can we do with that? We can see that the smart money bought it here. Will they try to buy again here? So they bought it there. All right. Now we know that they bought it here. So now the price deviate from that long-term equilibrium price level. We also know that the short-term equilibrium price level that we must watch for the Dow Jones for the next 2 weeks or so, if we are day trading or swing trading, is at a 17848. That's the pink line, this line here. Okay, 17848. You want to note it down. What I say to traders in a video that I posted at 24 digit 2 digit 4 24 stock trader YouTube channel, which I call Wall Street Trader Reveal Power of Proprietary Support and Resistance Level. You can YouTube search that video. Wall Street Trader Reveals Power of a Proprietary Support and Resistance Level by 24 Stock Trader YouTube channel. I was telling traders, which is still true now, that we want to give priority to bullish signal above 18615, and we want to give priority to bearish signal below 18615. They bought it at the second money key level, which is the long-term equilibrium, the second long-term equilibrium price level for the Dow Jones at 17077. Okay? On June 27, they bought it. Now the price went up because they bought it big time. Price ramped up and displayed a new high. So for that bullish momentum to continue at this point in time, the price must go above the high at 18615 and find a support. We have also this pitchfork tool. That's why I'm referring you to that video that I titled Wall Street Trader Reveals the Power of a Proprietary Support and Resistance Level by 24 Stock Trader YouTube channel. Okay, because this video that I'm recording today, I'll post it at Joe Trio YouTube channel. All right, so we have Joe Trio YouTube channel, 24 Stock Trader YouTube channel, 24 Forex Trader YouTube channel, Day Pro Trader YouTube channel, 24 Elliott Wave YouTube channel. That's all about us. All right, because some traders use only Elliott Wave, some traders only use Fibonacci, so therefore they must go to Day Pro Trader YouTube channel. All right, some traders use Elliott Wave to go to 24 Elliott Wave YouTube channel. But our number one YouTube channel is George Trio YouTube channel. You want to subscribe to our main channel to know what is going on in our circle. Okay, there is a circle, Google circle. There is a circle. All right, you want to know what's going on. All right, so subscribe to George Trio YouTube channel and never unsubscribe from that channel. If I say something that you dislike, you cannot subscribe for one day, and the next day you wash your face and then subscribe again. All right, so that's it. So the point I want to make, when we have, I explained already in a video that I'm talking about already. All right, if we have, for instance, this is what I explained to traders before, so let's go through it quickly. So we know the money key level, they bought it here. Now we see a deviation from the long-term equilibrium price level. Okay, so when you see a deviation from the long-term equilibrium price level, we want to know where is the short-term equilibrium price level. So a huge deviation from the long-term equilibrium price level is quite far away from that level now. So the price went up to 18615 from 17077. Well, that's a huge move. Therefore, we must pay attention now to the short-term equilibrium price level, which is at 17848. I'm telling you now, all right? Here it is. So as the price deviates from the short-term equilibrium price level, can you see that line? It's a very, let's change it into turquoise so you can see it on my chart. The reason why I choose that color pink, so that I may see it fast and know that this is something to do with the equilibrium level. So this is the turquoise line here. Now the price deviates also from the short-term equilibrium price level, was trying to retest the short-term equilibrium price level, but did not. But it did stop at the high of the last quarter. So a quarterly candle has closed at the end of June, and the price breaks above that high and retests it here. Will it come back down and retest the short-term equilibrium price level, or will it continue to go down all the way to the second long-term equilibrium price level? You want to know where are those money key levels so you can make excellent decisions around those key levels. If there is a deviation from the long-term equilibrium price level, in normal condition, the price should return back to that long-term equilibrium price level unless there are more value added to the financial instrument. So if more value are added to the company, the price may not return to the long-term equilibrium price level. In that case, we need to focus on the short-term equilibrium price level. Remember that the short-term equilibrium price level will remain in place for 2 weeks or 3 weeks or so. Because if a financial instrument is adding more value, there is a high chance we may see dynamic, a short-term equilibrium price level that are constantly changing after 3 weeks or so, all right? So all I want you to understand in this tutorial is that there are 2 money key levels in 2016 for the Dow Jones Index, and the first money key level is at 16679. The latest money key level for the Dow Jones is at 17077. You do not want to forget those key levels. Apart from the money key levels, which are the long-term equilibrium price level for the Dow Jones, we also have the short-term equilibrium price level. Currently, the short-term equilibrium price level that day and swing trader must watch is at 17848. For an investors, position traders, long-term to medium-term market participant, it is essential to know where are the money key levels. Usually, if we have a deviation for the money key level, there is a high chance the price may return back to the that money key level. So I wanted to show you something else before I wrap it up. You can see that here it is, they bought it at the first money key level, 16679, and then we see that the price went up like this. So here it is, you see here? So they bought it in the vicinity, remember this zone, all right? They bought it in the vicinity of the first money key level on the 10th of March 2016, and the price went up. So from that first money key level, which is the first pink line, the price went up to this level here at 18146, which is the high of the last quarter. So here it is. So since they bought it here, the price continued to go up all the way here. So this is the magnitude of the price action as they bought it somewhere in March 2016. Remember that the small money, do not forget those price move. So they know they bought it here, and this is how far Dow Jones went up. Look what's happening now. Look carefully, my friend. Look carefully. That's when it become more interesting. Now they bought it again here. Did the small money forget how far the Dow Jones went up before? No, they did not forget. How did I know? Look carefully. So now they bought it here, and see the same magnitude. So they bought it here in the zone of 160.79. Price went up to this point. This is our measuring stick. So they bought it again here, and they will use the same measuring stick. Look where we are now. So they bought it here in June 27. Here we are. We are now exactly there at 18615. That's why we are saying to traders that priority to bearish signal below 18615 and priority to bullish signal above the 18615. The reason why I have the pitchfork tool on my chart is one of the most neglected financial trading tool, but it's also one of the most powerful trading tools in the financial market. When a financial instrument is going up, as you can see here, it went up from the second long-term equilibrium price level, 17077. It went up to 18615. The market is beautiful, especially if you are trading Dow Jones. Remember that you are dealing with the smartest market participant. See how they are doing things carefully around key level, measuring things carefully. Okay, you see now? All right. So the price went up from here to this point here, and then it pulled back. We need 3 points to draw our pitchfork tool. That's the first point here. That's the second point here. That's the third point. You want to master the pitchfork tool or know more about how to use the pitchfork tool? Subscribe to the Pro Traders YouTube channel and never unsubscribe. Okay, all right. If you unsubscribe for 1 month because I was quiet or something like this, I say too many times, okay, all right. After 1 month, you come back again and subscribe. All right? All right. So now, the pitchfork tool allows us to determine the possible path that the price is likely to take. If you look carefully on this chart, that's why I'm referring you to that video that I titled Wall Street Trader Reveal Power of a Proprietary Support and Resistance Level by 24 Stock Trader YouTube channel. So the reason is that the price now out, the price was inside the pitchfork tool. Normally, if this is bullish, it will stay within the boundaries of the pitchfork tool. The pitchfork tool allows us to determine the possible path of a financial instrument. Now you see it came out of the P42 and now it's retesting the edge of the P42 and it's also at the target point of the smart money. So the body here, they know that they should achieve this magnitude because this is what was achieved before when we were here. Now the body here, they use the same measuring stick. If the body, here we are again, so we can apply it again here. So it pulled back. If they are truly buy, they will set another target somewhere here. At this junction, all you need to remember is that we have a deviation from the second money key level. The price found a support on top of the high of the last quarter, the quarter that has ended at the end of June 2016. We want to give priority to bullish signal only above 18615, and most importantly, we want the price to go back inside, the P42 to see a support within the boundaries of the P42. Ladies and gentlemen, I don't want this video to be too long. I've said everything that I need to say. Remember the money key levels for the Dow Jones, the two money key levels for the Dow Jones. The first is 16679 and the second is 17077. I need to remind traders this is my own proprietary trading tool that I'm sharing with the public, but I will never reveal the formula to calculate the long-term and the short-term equilibrium price level for any financial instrument. If you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. It is essential for investor position traders to know the long-term equilibrium price level or the money key level. You don't want to forget those levels throughout the year, even at the beginning of next year. So beginning of next year in January, we will be monitoring again what is happening around those key levels. Do we have a deviation from those key levels, and how do we handle it? All right. We are the GSTW24 traders talking about indices trader. Explain two Dow Jones money key levels. Happy trading to you all, and I'll speak to you soon.